coming on the podcast. So we talked a little bit, and we had like a very good phone conversation because I remember you were, you kind of hit me up on Twitter, and I was like, okay, let's have a call. And during the call, you were telling me a whole bunch of stuff about like the industry, about what you're working on, about your background, like how you came up as an entrepreneur. So I just think it's like really interesting stuff, and I'm happy you decided to come on.
Yeah, no. Thank you for having me. It's a pleasure to be here. Also, yeah, you have a great hat. Pretty sick hat.
Oh
So
yeah,
yeah,
are you
yeah,
a fan of
yeah. I'm not a fan of the Patriots. Unfortunately a fan of the Raiders. So hopefully this year will be a
uh,
little bit better. But yeah, yeah, we'll see though. I feel like every year's our year until it's not. So uh, yeah, but no, again, yeah, just thanks for having me, and yeah, it's a pleasure to be on here. And yeah, so
Cool. Cool. So maybe we could get started. Maybe if you want to kind of introduce what you're working on, what your project is, what Parlay X does, and yeah, we can kind of go from there.
yeah, so I mean, at Parlay X, we're basically we're building kind of institutional trading infrastructure for primarily our primary customer sets are sports betting syndicates and or hedge funds that are trading on sports. Some context here I think helps. Um, and well, I'll start off with basically, hey, like who is our customer? Because I think it's easier to understand what it is that we're building. Via the customer that we're building for. Um, so yeah, when it comes to like these sports betting syndicates, they're often, these are like traditional sports bettors that have primarily bet on, either betting exchanges and or other like maybe retail books. And oftentimes, they will, hire people to go and bet for them because they're banned at betting on retail books. And these are like a big group of people and funds that just spend kind of most of the day trying to find alpha or find an edge. Some of them tend to be systematic, meaning that they have a model and this model dictates, kind of what they will bet on or trade on. If they have some, plus expected value or some other strategy. Some are more, basically just like, I guess, discretionary, like kind of, I guess, betters or traders, whatever you want to call them. And they are basically, they have some information ahead of time, or and so they'll go and look to place a trade, or a bet at wherever they can really get money down. Their main issue here is that historically speaking, they haven't been able to get money down, because they have to oftentimes basically find other people to like go and bet for them. So one of the famous ones is, so for example, I don't know if you're familiar with Ashton Kutcher. So Ashton Kutcher actually worked with one of these syndicates, and was putting down like $1 million bets. The basically the sports book that was working with Ashton Kutcher thought that Ashton Kutcher was just like a dumb celebrity that was betting $1 million, when in actuality he was putting in bets for these syndicates. So yeah, it like ranges. But now with prediction markets, right? Like there's no bans because everything is basically, Kalshi, Polymarket, all these different platforms, they all basically just want volume churn. And so we basically provide this aggregation infrastructure and routing infrastructure to find them the best and most optimal price. And then on top of that, we provide solutions for setting team permissions. So if you're a large fund, right, you don't want to give everybody access to the same keys, right? Like right now, all the current implementations are like these retail aggregator products and or like browser extensions or like a Telegram bot, but it's like you're not putting millions of dollars in a Telegram bot or millions of dollars into a browser extension, right? Without actually having delegated team permissions. And so that's what we provide on our platform. So it's basically like Fireblocks and Bloomberg like had a baby together. And so you when you come to our platform, you can set what's called the tap policy, which you can like, hey, I want to permission this trader to this pod, and he only does I don't know, NBA strategies or NBA arbitrage, and I'm going to assign him a certain amount of buying power and a certain amount of risk that he can take, right? So you can set all these permissions. You can set the whitelist, which addresses that you want. And then we handle just all the back end in terms of routing, bridging, whatever it is. And so for the end customer is really just one balance that they have. So that's kind of what Parallex is, and so.
Yeah, it's really interesting. I was having a conversation the other day with Gecko, or Gollum Gecko, who's a pretty big trader on Polymarket. He has a decent P&L. Yeah, I believe it's like 200,000 or something in P&L, which is pretty good. So he comes from a traditional finance background. So he was talking about how he's skeptical that big institutions are using Polymarket, right? His whole thing is
Yep.
like, I don't think that big institutions are going to jump in and use Polymarket. One, because the platform is buggy, right? It's not like a professional grade platform. So if you're trying to make those quick trades as an institution, it's a lot harder to get in on these markets. And there were a couple other reasons as well, right? The risk, the liability. I'm curious from your end, what have you seen from institutions? Are they desperate for prediction markets? Are they like chomping at the bit, to get at it? Are they joining Polymarket? And if not, are you kind of providing the solution there?
Yeah, so I think it's an interesting question. So there's tons and tons of market makers that are coming into this space, right? So you have a lot of mom and pop shops that are coming into the space, but you have a lot of like existing, legacy players that are coming from the betting exchange side, that are coming onto these prediction markets, right? So yeah, you have tons and tons of market makers, and they are really chomping at the bit to get in. In terms of what we say institution, like I guess it's also important to define what does that necessarily mean, right? Like, are we talking about like insurance companies? Are we talking about sports books? Are we talking about, like, I guess what it is, like what is it that we're actually talking about? From our end, right? Institutions basically mean these like sports betting syndicates, or these like funds that are just trading on these prediction markets. So that's typically what we define as that. And I think what also people miss on is that a lot of like these I guess more hedging behavior like contracts are not done on like the public website. So the way that like for example, Underdog actually works with I think Kalshi, to hedge out some of their exposure, and this is pretty common. Like a lot of sports books do this. So I mean, I'm not saying that this is like brand new or like a innovation that prediction markets are necessarily having, but just an example as to like what an institution could do and how it's not necessarily publicly like available. So essentially, Underdog is a player prop, first like a kind of book. It's very retail friendly. It's like all player props. So bet LeBron James over, and I don't know, Jokic under or something like that into a parlay. Sometimes they'll get overweight a certain bet, right? Let's say everyone likes LeBron James, so everyone takes over. 80% of the book is on over. It's a lot of exposure to have. So then they'll look to offset that somewhere else, because it's they're not necessarily too comfortable with taking that amount of exposure on LeBron James, right? Basically, what they then do is, or I guess did, is like they went to go ask Kalshi, hey, we have we're overweight a certain amount of bets. Can you find us a market maker that is willing to take this other side of it so we can hedge it out? And so they did that. And this is done via a block trade that is done directly with the market maker. Currently today, all of this happens bilaterally, meaning that nothing actually happens on the Kalshi platform itself. It's just that Kalshi provides this connectivity layer for let's say a SIG or a Jump or a Raven or whoever to basically facilitate that trade with this other individual customer. So they'll connect Underdog with SIG, and then SIG and Underdog will worry about actually settling that transaction between each other, and that doesn't happen on Kalshi. So that's kind of, a lot of people just don't see those trades, but a lot of these are happening. And obviously Kalshi and Polymarket are very incentivized to have more of these trades happen, because this is what they're using as an argument to say, hey, we're not just a glorified sports book. Like we are actually, a useful, like, we're providing like useful utility in terms of like being able to hedge, right? So I think there is that caveat to that, in terms of, hey, a lot of these trades that are actually useful are not necessarily publicly available like data.
So most of the so if I get this right, basically most of the kind of big funds are jumping in as a way to kind of like hedge themselves, essentially. That's like the primary purpose that they that's the primary attraction for them when it comes to kind of like making markets on Polymarket or Kalshi or
Yeah.
etc.
Yeah. So yeah, tons of these market makers are coming in. I mean, it's very lucrative for them. The incentives and the rewards that Couch and Polymarket are giving are super high. I mean, so high that basically you don't necessarily even need to. I mean, you don't even really need to be profitable at all. I mean, you can get picked off quite often and still be okay because of the rewards, especially for certain market types. The certain markets have more rewards than other ones. And as long as you do semi decent, like you'll be okay. Oftentimes though, like everyone uses the same pricing oracles. So you'll see that the prices are basically very similar across like kind of wherever you are, which is kind of funny, right? Because, you know, right, everyone's like, oh, well, you should have a better price if you're trading on prediction markets. But if everybody's using the same pricing method, then you end up kind of getting the same things. And when you and then if you have pricing the same things, well, obviously there's additional fees on top of that, right? So um, oftentimes after fees, your prices on some of these sports like markets are very like are quite poor as compared to like a sports book or a betting exchange. Um,
For Parlay X, who's your ideal customer? Would you say like who are
yeah,
you coming after right
yeah.
now?
So we currently have like 5 funds that we're working with. Two of them are market making funds, and then three of them are like basically like these sports betting syndicates. Um, and so for the sports betting syndicate side, we basically just route them trades. We help them find the best price. They say, hey, I want to bet on this. I don't know, Switzerland versus Algeria match today, and I want to bet. I want to get up to I'm gonna use American odds in this case. I want to get up to plus 240 on Switzerland or something or on Algeria. Um, and I want to buy all the way up from 240. I want to buy from like 200 to 240, and then we'll go and like find okay, where's the most optimal place to do that. We'll look across Kalshi, we'll look across Polymarket, and we'll look across Predict.fund and Limitless, and we'll go and find all that, and then we'll give them back a quote, and then we'll go and then we'll go ahead and execute that for them, and we'll handle all the bridging as well. So obviously, right, like Polymarket and Limitless and Predict.fund, those are 3 different chains, right? BNB, Base, and Polygon. We handle all that bridging on the back end. We work with Li-Fi and we bridge that for the user, so they never have to see that. It's all non-custodial as well, so like we don't custody assets, and we just handle all the routing and orchestration of this. Yeah, and then we get them the price, boom, and then as well at the end of the month, we basically total up all their fees that they paid, total up all the volume that they did, and then we pay them back a rebate based off of all those factors. And us as a whole, as ParlayX, we actually get a better rebate from the exchanges because we're pushing larger sets of volume. So then we actually have and because we have like more of a balance sheet, we can actually pay the customers in advance and tell them, hey, like we will pay you. I don't know, let's say like $100 for every $1,000 that you come and trade with us, right? And so that's like a very good prospect to have because I can tell you like today what I'm going to pay you if for the X amount of volume that you route, right? Of course, this can change because on Polymarket there's a different rebate, and Limitless is a different rebate, and Predict.fund is a different rebate. But the point is that you actually have like in written understanding of like, okay, hey, how much I know exactly how much I'm going to get back. So that's kind of on the betting syndicate side. On the market making side, it's a very similar product. We help them see in like their portfolio, see like all the different things that they're trading on. We help them separate. Let's just say let's say you're trading, or let's say you're market making NBA markets. You can create a pod just for NBA markets, and then you can have you can open up that pod and then see okay, Lakers versus Jazz tonight, and or like all the markets that you're market making on, and then see how well you're doing across all those. So it just gives you a little bit more granularity, and then as well as I mentioned, right, like we have this, overarching like team permission, so you can delegate certain traders or market makers to certain positions. And this is like, I think like this is really important because I don't think people understand how important that is. Like for me, trading at a desk, right? Like you don't want everybody on the trading team to have access to every single part of your money, right? If you're a fund, like you want people to just be segregated to like a certain amount of things that they should own, right? And other things you don't want them to actually be able to touch. But when it comes to crypto, that's pretty hard because like if you just give everybody the same like wallet, well, it's impossible to do that unless you have like a gated system, which is what ParlayX is. It's like this like walled garden where we provide you the wallet, but we make sure on our side like, before every trade is placed, we make sure, hey, should this trader have access to this money? How much buying power does this trader have? And et cetera, right? And so that's kind of what we do as well in all of that. And that's what's kind of important to them, is having those like team permissions.
You mentioned something really interesting on the call that we had, and I think, correct me if I'm wrong, but I think you were building a terminal first,
Yes,
like a
yes,
consumer
yes.
product, and then you basically told me that from your conversations privately, you've observed that a lot of people are kind of moving away from like front-facing terminals into more infra plays because the demand is better in the infrastructure side. I'm wondering if you're kind of able to get into that a little bit here,
Yeah.
because I think we still have so many people building terminals, but I think that the insight you provided is really valuable. That a lot of people are saying, "Oh, okay, wait, like maybe I should be focusing on the big money instead of trying to grab like small consumer retail funds." You know?
Yeah. So I mean, this is okay. The reason for this is like one, there's just not any infrastructure built at all, right? There's so many different things, so many different gaps in the market. And if you look at the traditional sports betting side, right, like you have like the duopoly of Genius Sports and Sports Radar, right? Um, and there's kind of all this infrastructure for you already built in when it comes to like the sports side of things that you don't necessarily need to build out a lot of things yourself. But when it comes to prediction markets, like literally when I say nothing is built, like nothing is built, like, you have to build everything from scratch, right? So like you start like building some like tooling or like some like ParlayX, and then you realize, oh crap, like I thought we were a trading company, not an infrastructure company. But you basically need to become an infrastructure company. Like you need to build your own infrastructure, right? And so and obviously there's other companies that are trying to build like infrastructure, but the issue is that a lot of them are very generalized, and so going back to this whole like going back to this whole like retail or being like a retail aggregator. One, it's really hard to acquire customers, right? Because if you don't get like the top 10 traders on Polymarket or Kalshi, like you're really not going to survive at all, right? So it becomes really hard, and then as well as like, okay, where you're like, oh, okay, well, I'm already kind of building this infrastructure. I might as well just like kind of go and like sell this because that's what's going to get me to money faster. Also, I mean, from the perspective of raising money, it's really hard to raise money building API infrastructure or just infrastructure though, because there's not really a moat, right? Like there's not a moat to like building all these API sets, right? And so that's another issue where, yeah, you can go down like this path of building infrastructure or building this API infrastructure, but like at the end of the day, like anyone can do that, and then it's just going to get commoditized, and it's going to be kind of a race to zero. And so it's really like what you do on top of that actually brings value and accrues value. And so, yeah, I mean, that's kind of what we saw when we were building a retail aggregator product, right? We saw that same thing. We're competing in a landscape where there's tons of people that are trying to acquire the same customers as we, and it's like, hey, actually, we should probably go lower down the stack and like be more niche. And like, why don't we just work with people that are actually doing most of the volume anyways? So that was the thought process behind that, like, kind of pivot or move. And I mean, luckily enough, like we have pretty good advisors that are with us, right? So they connected us to a lot of these like market making funds and sports, kind of sports betting funds. So yeah, like super huge help. Like one of our advisors' name is Jeffrey Haas. He's the ex-CIO of DraftKings. So he had a lot of those introductions for us. And so yeah, so that's been helpful. And as well as like, we have another advisor, Petrit Barisha. Pet Barisha, he runs Sporting Crypto Ventures, and a newsletter, Predicted It. So yeah, they made a lot of those early introductions for us.
And you guys are also venture backed, right? I think, or you raised your first seed round, if I have that
So
right.
yeah, so we haven't announced it, but we will be probably announcing it sometime in the next couple of weeks. But yeah, we are venture backed, and that's what I meant when we have hey, we have a balance sheet. Um, yeah, we have raised a bit of money, and we'll be announcing that pretty soon. So yeah, you can look forward to that. Yeah.
So here's a question that I have too. Since you're kind of like in this space and you're kind of in the middle of it, I'm constantly told. So we started a terminal ourselves, and we were told when we first started the terminal that most of the other terminals are wash trading, right? Like most of
Yeah.
these
Yeah.
guys. Like, do you have any insight onto this? Like, how much of the volume that we see on Polymarket, maybe not Kalshi because I don't know much about Kalshi, but how much do you think is generated by like actual volume versus wash trading volume?
I don't want to call out any particular exchange out, but I mean, yeah, I mean, you can tell who's wash trading. I mean, the easiest way to do it is like go look at their main markets, see like how much volume they're doing, and then look at the order book, right? Like if it has like $200 million in volume, and then you look at the order book, and the order book is literally like $5,000 of liquidity. Okay, I mean, it's wash trading. You know what I mean? Also, if like it's like three wallets that are doing like 90% of the volume, it's kind of obvious. But yeah, I mean, it's quite prevalent, right? And this goes back to the whole thing that I said at the beginning is that the exchanges don't care. The exchanges just want volume trend, right? And you got to think about it from the perspective of raising money, right? So if you're an exchange and you want to compete with Kalshi, you want to compete with Polymarket, you need more money, right? If you have 10 million, $20 million, it's not enough. It's not enough for you. So what do you have to do? You have to basically show that people are using your exchange, but no one wants to use your exchange because there's no liquidity, right? So what you do is you just wash a bunch of this volume, right? And on paper, an exchange is the easiest and stupidly easiest business model, right? It's like volume gets me fees. Fees equals revenue, right? So you just attribute all these like fees that you're generating to revenue, and to you, the exchange it's at no cost, right? Because you're just charging yourself fees, which you can just put back again and again and again and again, right? No one else is getting these fees, right? So that's a huge plus for you because you can just basically attribute, a bunch of this like volume into actually being revenue when it's not revenue. And so look, like you oftentimes that's what ends up happening, and the reason for that is because like that's the incentive for the exchanges right now. It's just like, hey, I need to train a bunch of volume to get fees, so that way I can go and pitch to these new investors to give me another $100 million. So that way I can actually compete, right? Like that's just the reality of the situation, right? Because if you can't show that you have revenue, no one's going to give you money. And the other thing too is that I mean, many of these people that are currently raising right now for prediction markets, they're pretty smart. They're not going and raising with crypto firms. They're going and raising with very traditional players. Like I don't know, Union Square Ventures or some other I guess good brand names, but like they're not familiar with the crypto space. So they don't know anything about this wash trading. So they think, wow, this is like the greatest business on earth. When in actuality, like they really don't know anything, right? So yeah.
I think you brought up some, kind of like in that you brought up another interesting point, which is like when you're talking to these market making funds that have no kind of, this is a new space for them. They probably don't know much about crypto either. I mean,
Yeah.
I don't know if it would help if they did, but what is their biggest hesitation when jumping into prediction markets? Like, what is the kind of hill that you have to climb to convince them that this is something that they should do?
Yeah. So, I mean, for the market makers themselves, like they're usually like they know that they have to get into the space, right? Because like, I mean, it's economics are better than what they're market making on betting exchanges, right? So for them, it's like easy. But the issue, right, and something that I didn't bring up before is, yeah, like none of them know anything about crypto, right? Also, a lot of these guys that have been market making on these betting exchanges like Betfair or some other one, right, Bet365 or whatever it is, like these are older guys, right? These are a lot older guys, and they're super smart. But the issue is that they don't have like the 23, 21-year-old, 18-year-old kid that knows how to build stuff on chain, right? Like this is brand new to them. Also, too, I think another important thing is that currently right now, right, in terms of people in the crypto space, there's been a mass exodus, right? There's like it's really hard to find good like developer talent today, because everyone, like all the young like smart guys, like they all left to do AI, right? And or to do something else, because like crypto hasn't really done well in the last couple of years, right? Besides prediction markets and maybe some pockets like obviously Hyperliquid, but yeah, like it's been killed. So yeah, so that for them it's like they don't really have the talent. They don't know anything about blockchain in general. So it's like a huge uphill battle. Not even like, let's say you could get the dev side of things. Now you have to find like a bunch of those guys, but like how do you even figure out who's actually good? Like if you have no idea at all what like any of this blockchain stuff is, and so yeah, it's like a pretty large challenge for them to figure that out, and that's I think what they're most hesitant about, is really the underlying technology and figuring out how to aggregate all this stuff. Is quite a tedious task, and that's why too, like obviously infra is good, and infra can be good because obviously you have to constantly be updating all this stuff, right? Whenever like Polymarket comes out with something new, like for example, right, like a couple months ago, we had like finished our Polymarket integration, and then Polymarket's like, hey, by the way, we're going to switch to our new stablecoin. Like, oh, fantastic! Like, okay, so we had to redo our entire system, and also they like deprecated like some smart wallets that we were using. So you couldn't use them, and you basically couldn't create new ones. So any new users couldn't use those wallets, but like old like customers got grandfathered into the program, but they deprecated the service after that. So it was like, okay, well now basically we have to redo our entire system, right? And that's what I mean. Like there's always stuff like that, and if you have like 10 different exchanges that you're integrating, I mean, it becomes very annoying. Also, you have off-chain ones, right? So we're in the process of integrating. Like we're going to be probably working on ProfitX next because they just got their license like a week or two ago, and then probably Novig after that. And so yeah, integrating the off-chain ones is also annoying because you have to build certain stuff for them specifically. But yeah.
What type of exchanges are you looking at right now? Like what does an exchange have to do to meet your interest level of integrating these guys? And I guess this kind of ties into a broader question I have for you of like what kind of products are you without mentioning specifically, like what products are you kind of bullish on in general in the prediction market space right now versus like exchanges that you might just look at and be like, no, let's ignore those guys.
Yeah. So I mean, for us, so for example, I'll mention, we're working on Predict.fun as an integration currently, and the reason that we decided to go there was because Predict.fun has a good amount of liquidity. Like if you go look at their books, like they perform pretty well, especially on like the main markets. Maybe they don't have like the most diverse set of things, but they do have quite a lot of liquidity on the things that matter, right? And the things that are like people want to trade. Same thing with Limitless, right? They have a good amount of liquidity. They offer good incentives. So that's kind of why, right? And then beyond that, I mean, there's not really much else. SXBet's pretty good too, like decently good. But then beyond that, there's a huge fall off. Like it's like super tiny amounts of liquidity. There's not really a lot of pockets. So that's why we want to basically stay on chain because it's better for us, right? Because we basically can unify all of that, right, behind the scenes. The off-chain stuff like Kalshi, we can't really unify that. We do have DFlow as well as an option though, so you can stay on chain. But there's it's probably better to just use your Kalshi account than use DFlow. Probably get a little bit better of an execution price. But the reason that we're going to ProfitX is because, hey, we can be the first mover there with them. We can be an early partner there. They have a lot of liquidity already from their underlying betting exchange that they were building, and there's going to be a lot more of an institutional flow also from them, right? um, what we've heard is that, hey, our engineers are so busy building all these like retail, features, that we don't have time to like really service the market makers. So we're happy to give you those introductions because we're just not going to be able to service them within the next year, probably, right? Like, things that these market makers want, like, complex order types, like trailing stop losses, icebergs, smart taker orders, what, just, yeah, like all those, like the TWAPs, VWAPs, things like that. Like all those like complex order types are not built natively on any of these exchanges.
Yeah.
And their team and their engineering team is still focused on building, the core of their product, which is for retail. That, when these market makers tell them, hey, we need these features, like that's not a priority. And it's probably not going to be a priority for a very long time, because they're trying to add features. So that's the main thing. I know maybe I didn't answer exactly your question, but yeah.
No, so I have a kind of a stupid question coming up right here. I mean, it might be a stupid question, it might not be.
No stupid questions.
I mean, like my whole thing is like the other day I'm looking at these high probability markets, right?
Yeah.
And it's like 90% like, will Jesus come back in 2026 or something? And I'm just like, who is making the other side of these markets? Like, where is that liquidity coming from? Do we know? Do you know? I mean, like, it's baffling to me because I'm just trying to figure it out.
Yeah. So I mean, in terms of that market, I don't know if there are market makers that are trading that market. I think most of them are relegated to like sports markets or trading things that they know. I mean, I know Sig, Sig trades a lot more markets than just sports. They do trade some political markets as well, and some elections, like wherever they think that they can find good alpha. Same thing with Jump. Jump is getting into it. Raven is another big one. Raven is a a market maker that was spun out of Wintermute. And I think we're doing a lot of crypto stuff, but they completely pivoted into just doing prediction markets. I was at Flowdesk. I'm pretty sure Flowdesk now is like starting to do some of the 5 or 10, 15 minute like crypto markets, right? So a lot of the crypto market makers are jumping onto the boat. At first, they were a little bit hesitant themselves because like it's from a market maker's perspective, and working at the desk, right? Like when you try to create a new business line, like there has to be pretty good incentives for you to do that in order for you to spin it out. And at the time, like when I was there in like January, February, or like December and January, like prediction markets were still like they felt like they were coming up, but they were like, okay, like I don't know if it's enough for us to like try to go into the whole business line. I think at this point, like that is the case. Like there's enough incentive and there's enough need, and there's a bunch of new people that are coming in, so it makes sense. But it's also just it's like some brand names that have been market making on these like larger betting exchanges, guys that have been primarily been at the have been doing so. There's like a whole other business line called MTS, which is like managed trade services. All the sports books, unless you're, I mean, even the biggest ones, and especially if you're a small sports book that is just starting out, you hire an MTS service, which is somebody like Canby or somebody like a BetB. These are businesses that basically give you a trading team for your sports book, and they manage your markets. So yeah, you can have your pricing, but you need somebody that's actively watching all the stuff that's being bet, and so they do this. And so now some of those guys are also doing some of the prediction market stuff as well. And then as well as like you have a bunch of these mom and pop shops that are getting a Pinnacle API and using that as their source of price, and then saying, hey, let's start market making.
Yeah, it's interesting because so you mentioned like the markets that these market making funds or that the people you're working with, like are there categories they're most interested in? It sounds like crypto, they're heavily interested in that category. They're interested in maybe the political markets. Yeah. I'm curious on what type of markets are you getting a sense of what their interest is?
Yeah, I mean, look, like 90% of the volume's in sports, right? So primarily it's mostly sports, especially because these betting syndicates, like again, the issue from the betting syndicate side is not necessarily that, hey, we love prediction markets. It's just that, hey, I can actually put money down. I can actually get money down right? That's like the main thing. It's not even about like I like prediction markets, they give me a better price. It's literally like, oh, I don't have to like go and hire, a mule to go and bet for me. I literally can just like go and put it, like, I don't need to hide anymore. I can just like I can get as much money down as I want so long as there's enough liquidity. Right. And so, right. So that's like their main thing. But yeah, we also have some other market makers that, are market making these crypto pricing stuff. And I think they're still quite, I don't know if, I mean, maybe there's a little bit of edge left there, but it is quite hard. I mean, you need a good Oracle price, and if you're kind of a retail person that's trading that, like, unless you have a really good Oracle, like maybe like a Chainlink Oracle, which is going to cost you probably a couple thousands of dollars, like you're not going to do well using Coinbase API or Binance API as your Oracle price for that, because that's going to be quite delayed. And so yeah, so to get to that, like the main issue currently right now is there's a lot of data latency issues when it comes to market making on these different platforms. So arbitrage between the exchanges is pretty difficult. And yeah, but these market makers are primarily trading like these crypto prices. If they were like market making crypto before, then it's kind of an easy transition for them. They're looking into getting into sports, but they're obviously they don't have all their traders are crypto traders. Like it's kind of hard for them to switch. Political markets are a little bit more niche, so I think only the bigger funds like touch that, and or the smaller pop-in shops. There's a lot of smart people out there that are market making these, and again, there's incentives there for each market that are quite lucrative for you. But I think primarily it's going to be sports, because the thing with sports is that these events are repeatable. When you're market making a political event, yeah, you might know something like one event particularly well, and yeah, it might be positive expected value for you. But if it's just one event, I mean, and you're wrong, well then you're kind of screwed. But when it comes to sports, right, like as long as you have a positive expected value, or theory is okay, as long as I have a positive expected value, right, over time I should win. So even if this one event, right, I lose money on, well, in the future I should be doing well, because I am taking expected value every time I'm taking these markets. So that's what it is that there's more repeatableness, right? And repeatableness is good for math, right? Like it just
yeah. That makes a lot of sense that they would be interested in like the high event, like like basically what you're saying is that because of these certain event categories have like a lot of different events that you can trade on like a really good timeline, basically. So it makes total sense that I think that they would be attracted to that the most. I would just like to meet the institutional fund that's making the Jesus market. I would like to figure out like what the motive is, what the incentive is. I mean, like part of me thinks that, look, like I've heard a bunch of people say that you can use prediction markets as a way to like, maybe a politician would dump money into one side of the market to promote their campaign or something like that. Like there's ways to use them as almost marketing vehicles to get a message across or to get a point across, right? We saw with the all the the geopolitical stuff that happened earlier this year. All of those insider trades, like, are these insiders or are they just really like psyops by the state trying to dump money into a market to pretend it's an insider to give misleading information? So like we had like layers upon layers of like how these markets are being used in ways that you don't typically see with stocks or crypto, because they're so tied to these specific event outcomes.
Yeah, I think we're going to see more of that probably in the future. Again, right? He's like, there's not really like a lot of liquidity for a lot of this stuff. So yeah, I find those to be pretty interesting. Obviously, the Jesus market is also kind of a fun one. But yeah,
like for your company, I'm waiting for like the weird, like the weird client that comes up, like someone who you don't expect, who's like, hey, I want to take advantage of your service. Well, why? It's like maybe to induce some sort of psyop internationally or something.
Yeah, just like pump all like for a certain like election or something. I'd be pretty funny.
Pump all the So I think the fact that you're working with the like the people that you're working with, I think is a good move. I think it makes sense to me that
Yeah,
because
yeah. Yeah. It's also it's also an uphill battle, right? I know that, right? I'm young, and I know, and I kind of know what I don't know, right? So, um, yeah, it's definitely an uphill battle, especially because all these like clients are super super smart. They expect a certain amount of degree of service. We try to be available, pretty much 24/7, um, and because essentially we're running their trading desk, so we need to be up and available, and so um, yeah, it's a ton of work, but it's definitely a lot of fun. I get to build this with some of my best friends, and people that are super super smart. So a lot smarter than me. I think I've done a good job about that. Is basically, uh, I always, sometimes I feel like I'm the dumbest one in the room, and I think that's good. And so yeah, I love my team, and yeah, I'm just excited for what we have like going on ahead. We kind of found this like little bit of a niche here, like a little bit of a beachhead, and so just trying to kind of expand that out now, into more funds, more traders, things like that. And yeah, we'll become like more publicly available following August 1st. Right now we're like in a closed, like, I guess, pre-release, um, but yeah, we'll become available probably starting August 1st for individual traders and or like other teams that are looking to kind of come in. We kind of want to keep it closely gated for now, just given that we're still fixing up a lot of different things, and we're adding a lot of new features. And we have our 5 like design partners that we're pretty happy with and comfortable with, and we felt like we've given them a good amount of value, and we just want to kind of continue to do that and like grow off of that base.
so kind of like that's what's kind of in the pipeline. Basically, that's
Yeah.
what's coming next. I mean, do you have any kind of major announcements that are coming up, that that you'd like to mention on the show right now?
Yeah, so we have a plethora of news that's coming up. We have a few partnerships that are in the pipeline, that should be out. So yeah, I mean, obviously we're going to be probably announcing all of those pretty soon. So I don't have anything that I will say publicly, but you can expect within the next couple of weeks we'll have quite a bit of announcements to announce. Obviously the raise, but there's tons of other ones as well. Um, and really from our end, it's just a lot of product features that we're launching that we're pretty excited about. Obviously, I talked about complex order types, talked about like team permissions and having this like enterprise team permission. Also shipping out a front end. Primarily most of our funds are systematic, so we really focused heavily on the back end first. So we didn't have like a front end until recently, because there really was not a need for it. But we'll also have that soon as well. So I'll be able to demo some of that. Because it's hard to demo a backend API, right? Like, how do I demo that? So yeah, but we have a bunch of other features, product sets that we're working on that we're excited about. So I'll kind of quickly walk through some of them. There's a couple of issues currently right now, right? One of them, and primarily the biggest issue that we've heard from our marketing clients, is there's a data latency issue between all these exchanges. So we built out these like WebSockets, right? And these WebSockets, for people that are unfamiliar, the difference between an API and a WebSocket is an API. When you call it, you're basically like, let's say I want to get a price on Polymarket. I'm calling it and then I'm getting the price back. But I just get this price. Like, okay, here's the price. But then I don't know what happened between the time I got the price and between like whatever, right? It's not a live stream like this, right? It's not a live stream. It's like a snapshot. WebSockets, basically, we've created this, which allows you to actually stream the price feed like fully directly to your, to the customer. Okay, cool. And then we also like unified that WebSocket stream. So we've taken taken Polymarket, taken Kalshi, taken Limitless, unified all of those into one order book, and then stream that to you. But the issue with this is that the latency between all these exchanges ranges. It can be anywhere between 700 to anywhere like 400 to like 1,400 milliseconds in latency, right? And this is pretty bad, right? Like 1,400 milliseconds in latency. That's 1 second. It's 1.4 seconds, right? That's huge latency. You want to get that down to like probably more like 500, 400, right? Like we're not trying to do HFT here, but like we're trying to get that down to a reasonable time. And more importantly, not even get it down to a reasonable time, but just get it down to a more consistent time. Because the market makers care about, like latency, right? but they actually care more about consistency because I need to know like consistently, okay, how much like time is delayed here, right? If it's always 700, like always having 700 milliseconds of delay is way better than having 400 sometimes and sometimes 1,000, right? Like you don't want that like inconsistency. So we need to provide that consistency. The way that we do that, or the way that we're looking to do that, is through a couple of ways. One is like obviously geolocation, making sure that our servers are geolocated properly to each exchanges, like geolocation. There's also, I mean, in terms of like the blockchain, obviously getting better RPCs and getting more premium RPCs through like Alchemy. And then the third way is like literally having to physically rent like optic fiber to better give us more consistent like data. That's one of the problems that we're looking to solve, and probably like most top of mind. The second one is in terms of the actual like I guess bridging is like, okay, making sure that the bridging piece is pretty clean, and that we're able to give. So we allow basically users to essentially like we handle all the bridging and we rebalance your portfolio, but we also allow them to set a hey, I want 60% of my portfolio on Polymarket. I want the other 20% on Limitless. I want the other 10% over here. This is just so that they can like have the funds there. Like even if they didn't have the funds there, we would still like go and like route it, but then that costs like fees. There's fees to that in terms of bridging. So we just allow them to like have this set, and then that's automatically automated. So whenever their Polymarket balance drops below 60% of their total portfolio, we'll go and like move that over like instantly. So just another like nice to have kind of feature there. And then there's also a couple other issues. The third issue, and this plays along to like the actual WebSockets thing, is in terms of data, is that there's no universal market mappings with any of these exchanges. So what does that mean? Going back to this whole thing of like, okay, Sports Radar and Genius Sports, they have this like duopoly when it comes to like the sports space. All the market makers use Sports Radar and Genius Sports, and they have what are called market mappings. These market mappings are essentially map the markets to certain like IDs for every single one. So hey, I want NBA and I want LeBron James. Give me that one, right? That ID is mapped together. And then when you pull that market mapping ID, it gives you everything about LeBron James that you could ever ask for. When it comes to Kalshi, that's not a thing. It's just basically like, okay, sports. And then boom, like all kinds of information, like, Lakers, Jazz, like cricket, esports, like it's all over the place, right? There's no market mappings at all. So you just clicking all this data and it's like really confusing. And so that's why you often see that a lot of these like search engines for most of these, like if you try any retail aggregator product or other stuff, a lot of their search engines are very, very like poor. A lot of them try to use an LLM to like, have a better search engine. But the issue is that the LLM can only do so much. It can only do so much because the actual like underlying market map, there's no market mapping. So it has to like redo every single entire match itself. And when it tries to look for keywords, it's like that keyword doesn't exist on the actual exchange. So that's a super annoying and frustrating issue that a lot of people are facing currently. Is like, a lot of the markets for these exchanges are just not mapped very well. And that's for everything. That's for Kalshi. That's for Polymarket. That's for I think Polymarket is a little bit better. But overall, in general, like that's how it is across the industry. Is that there's no universal market mappings, and I think that is going to be a need because it's like really frustrating to kind of have to build all those things. And if you want to build like a matching engine, it's another thing. We're also building a matching engine. So, okay, hey, we might not actually have the search might not be good, but we need to build our own internal LLM matching engine. So we have to build that ourselves. But this is also quite complex because one, it can be very expensive if we're using tons of tokens every single time. And because these events are constantly being updated every day, there's new event contracts. We have to continue running that model. And if the search is bad, well, then our matching is going to be very bad too.
Yeah, I mean, it sounds like the fact that you mentioned that you're going to kind of, even to increase your speed, you're considering building out like cable, like renting out cable infra. It sounds like you're building some really cool stuff, to be honest with you. I mean, this is this is like a heavy infrastructure play, and I think it's really needed in prediction markets right now. I mean, I totally agree with your assessment. Just based off my feedback, people have been telling me that institutional players are just kind of frustrated with the lack of professional info when it comes to prediction markets. So
Yeah,
I think that this
and
is
and
good.
and and look again. Like I just want to make this point like clear. It's not even that like oh, it's not that these institutions can't go and create their own API sets. Like I think that's not that hard, right? Like just plug in an API set and like go and do that. That's pretty easy. The issue is actually like okay, we have to build all this tooling on top of it, right? If we want complex orders, we need to build it on top of it for every exchange, right? That has its own nuances. If we want to build our, if we want to have team permission, that's not a thing. We need to build that ourselves. But then at that point, it's like, dude, I'm basically creating a company, right? And also like, right, for something I didn't mention, having, tax reporting, right? Like that, these funds don't want to do that. Um, so like, it's all those like, it's a culmination of all those things. And obviously, again, right, like the exchanges are so focused on, building for 95%, 99 or yeah, really probably 95% of their customers, which are just retail, that everything that the market makers want or institutions want is just put on the back burner. So yeah,
I mean, does Polymarket even do tax reporting or no? Is there like any tax thing going on there or no?
I don't think so.
Yeah,
I mean,
that's a huge business. If someone wants to pick that up, I mean, just
yeah.
really creating a sort of
Yeah, I mean, we're yeah. So if you're doing that, let us know. We'd rather not have to build any of that ourselves. Well, I don't think we're going to build that ourselves, but we're going to just provide the inputs and the data. We're looking to work with a couple of like fund admins, like there's another one called Luca or Lukka. They do a lot of fund administration, and do a lot of tax reporting. So looking to work with like some of those people, and but obviously they haven't done too much in prediction markets either. So it's kind of a learning process for everyone. But yeah, if you're building that, would love to chat. I think that's super huge. Also just a couple other things that I think would be cool to build. So tax is very good. Another one is just having a credit facility, more credit facilities. I know there's a couple out there, but credit facilities specifically for market making clients, I think would be super helpful. Another one is like an OTC platform. So I don't know if you're familiar with like BitGo or like Copper or like these other platforms.
Oh yeah, big go.
Yeah. So like, okay, like what, like, why do people actually use BitGo? Like so at Flowdesk, we use BitGo a lot. And basically what BitGo is literally, it's like a platform where I can go and essentially trade with whoever else I want to trade on the other side. Right. And they handle all the KYC beforehand. And like I mentioned before, right, with the whole underdog thing, nothing currently happens directly on the platform. There's no platform. It's just like happens bilaterally. So like if I want to go and trade, if I'm underdog and I want to go and like hedge out my sportsbook exposure, I need to go directly to a SIG and then we handle it together. But it would be much better if there were just a platform where like an OTC platform where people could go in like a BitGo essentially, and then just KYC with, I would KYC with BitGo and BitGo KYCs everyone else. And then as soon as I get onto the platform, I'm connected to whoever's in the actual provider network, and then we can settle directly onto the platform. You need a broker-dealer license for that though. So I will say there's probably some cost to that. I think it's probably $500K too in capital requirements or something like that. But that is probably going to be needed within the next couple of months because everything right now happens bilaterally or off platform. And it's much better to actually have it on a platform. It just makes everybody's life easier, and makes actually institutions be able to trade like far easier as well. Yeah.
Yeah, I mean, I think there's some interesting stuff that's coming in the pipeline. I might actually build some of those ideas if people in the audience don't. So like, definitely looking out for that. Andrew, thanks for coming on, man. I really appreciate it. This was like just learning more about the side of the business that you're building. Which is not the consumer side. We do a lot of consumer stuff. So it's great to have you on to talk about like the more again, the more institutional facing side of things or infrastructure side of things.
Yeah, no, I mean, again, thank you for having me. It's been awesome. I also just again want to give a shout out to my team. I mean, they make all this possible. So shout out to Antonio, Chanda, and Pete. G, Eugene, Andy. And yeah, I mean, you guys make all this possible for me. So I appreciate you guys and all the hard work that you do. And and yeah, John, thank you so much. It was a pleasure. Always happy to chat. Also, anyone, if you're ever looking to chat, happy to chat. Just hit me up. I'm pretty open book. As you can see, I like to talk. So yeah, I'm just excited about this stuff.
I love it, man.
Yeah,
I love it.
Yeah, I get excited. Yeah, I get excited to chat. So hit me up. Also, if you're a trader or a fund or a market maker, and you want to trade some of these markets, yeah, hit us up. We have a contact form there, or you can just hit me up personally. I'm at Andrew at parlayx.com. Hit me an email or on Telegram. It's Andrew Parlayx. So feel free to reach out to me. Yeah.
Cool.
Thanks so much, John.
Cool. Yeah. Thanks again. And next time you want to come on, just hit me up and we'll have you on again.
Sounds good. Yep. Yeah. All right. Thank you so much.